let's face it, American industry, for better or for worse, depends to a very large extent for its manufacturing output on intermediary inputs from countries, particularly China. So there will be a lot of blood on the floor in various workplaces and manufacturing plants in the United States.
Let's talk about Europe. The import tariff on EU goods to America, it was cut yesterday, remember, from 20% to 10% for 90 days. Still a 25% rate for aluminium and steel and cars. Where do we go from here, from a European perspective? Yanis Varoufakis is an economist and a former Minister of Finance in Greece. Welcome to the programme.
Thank you very much.
Can I ask you, first of all, just for your interpretation of what we saw yesterday, that spectacular U-turn, the retreat by Donald Trump. What did you make of it?
Well, it's clear that he buckled under the pressure of the bond markets. It wasn't the bond vigilantes, as some say. It was the fact that so many of the players in the money markets, especially in the United States, had over-borrowed to bet on the markets over the last months or years, using US treasuries, American government bonds as collateral. And a lot of those trades had to unwind, so they had to sell them. There was a fire sale of bonds, and that spooked Trump, there's no doubt. So there was this U-turn. I wouldn't call it a spectacular one. What I think the headlines should be is that we have a full-on trade war between the United States and its main trading partner, which is China. Those tariffs are beyond belief. They are huge Chinese wars between now the United States and China. At the same time, as you mentioned, we have a remarkable new tariffs between the United States and the European Union. What I think we should take away from this is that the model, the business model in which the Eurozone, in particular the Eurozone, the European Union more generally, has been based upon. This is, essentially the mercantilist economy of the European Union, which is so dependent on massive net exports to the United States. Well, that's over now. And the Europeans have to take account of that. They have to look into their own bosom to find out, what can they do to rebalance their own economy. And I very much feel that they're not doing that.
Okay, so just push that a bit further for us. If America needs to be taken out of the equation, or has taken itself out of the equation, what does that European compensation look like? You can't make up the space simply by trading more with each other in Europe, can you? Is it about looking for new markets elsewhere in the world and better trade deals there? How do you see that?
I don't agree with you. Europe, for 3 decades at least now, has been basing its business model on suppressing domestic demand within Europe. This was the policy of austerity, combined with a lot of money printing in order to keep buoyant the financial markets in Frankfurt and in Paris. And that has made German goods and Dutch goods rather competitive in the United States. There is a lot of room in Europe for increasing investment and therefore increasing demand, and being able to balance the economy so that, yes, I'm all in favor of trade with other jurisdictions, including the United States, but I'm not in favor of the model which is predicated on excessive net exports to the rest of the world, because that is like exporting deflationary forces to the rest of the world. That is destabilizing the rest of the world, and Europe has been a destabilizing force around the world.
Yeah, I suppose there will be those who would say that the austerity that you described was about trying to retain credibility with the markets and to keep the balance sheets of various countries, including the United Kingdom, in reasonably good health. But you would reject that. You would argue for something bolder.
I don't think that, firstly, the markets care very much on whether you are following beggar thy neighbor policies. The markets can be placated through austerity. There's no doubt about that. We've seen this in Greece. Look at the state of the Greek bond market. It's actually quite healthy. But, of course, the country is fading. The United Kingdom has more or less kept the markets happy, except for the Liz Truss episode. And yet you have an unsustainable economy as it is, because you have this huge liquidity in the City of London. The City of London is quite happy with it. But that liquidity does not become productive investments. And this is why you have a large trade deficit, the current accounts deficit, which is constantly sucking energy out of the British economy.
Okay, always interesting to get your thoughts on that. But just as we're speaking, the White House is now saying that Americans' tariffs on Chinese imports now effectively totals 145%. They're taking the 125 rate that was announced by the White House yesterday, and then adding on a 20% fentanyl-related tariff that was previously imposed on China. Now, maybe you can argue that, look, 125, it amounts to the same thing. Who's going to trade with tariffs at that sort of shape? But how do you see that confrontation, if I can ask you, how do you think that might play out now? What's your guess?
Well, it's clear to me that Donald Trump doesn't care very much about the granular effects of his policy on American industry itself. Let's face it, American industry, for better or for worse, depends to a very large extent for its manufacturing output on intermediary inputs from countries, particularly China. So there will be a lot of blood on the floor in various workplaces and manufacturing plants in the United States. The question is, it's an empirical question. We cannot answer this, off the top of our heads. On the one hand, there is going to be an influx of capital. Already, we know that BASF, Mercedes-Benz, and BMW are planning to shift whole production lines to the United States. They're investing directly in the United States. That's going to create jobs. That's going to be along the lines of what Trump wants. Then there will be a lot of businesses that are operating today in the United States, manufacturing industries, the ones that he wants to help, which are bleeding as a result of the fact that they can't import the very good quality and low price intermediary goods that they were importing from China.
Yeah. So I think we might have lost the line there, but I get your point. A balancing effect on both sides of the equation, and you're not convinced that the Trump calculation is going to add up or work out. I have to leave it there because time's caught up with us. But good to talk to you. Thank you, Yanis Varoufakis.
Was this idea of doing a pause, did that just come about this morning? Can you tell us exactly what came into consideration for you and your advisors?
For a period of time, I wouldn't say this morning. Over the last few days, I've been thinking about it. I've been dealing with Scott, with Howard, with some other people that are very professional. And I think it probably came together early this morning, fairly early this morning. Just wrote it up. We didn't have the use of... we didn't have access to lawyers, or we just wrote it up from our hearts, right? It was written from the heart, and I think it was well written too. But it was written from the heart. It was written as something that I think was very positive for the world and for us. And we don't want to hurt countries that don't need to be hurt, and they all want to negotiate. The only problem is, you can only do so many at one time. It's like, we want to do it right. We want to get it right. We want to take care of them, but we have to take care of our country. So, but this was something certainly we've been talking about for a period of time, and we decided to pull the trigger, and we did it today, and we're happy about it. I didn't know it would have that kind of an impact, but it's, I think they have the biggest increase in the history of the stock market. That's pretty good. You're almost, if you keep going, you're going to be back to where it was 4 weeks ago.